Morning, Jaws. Eddie, Goodell, Kona, Fluxus. All right. So I did go through and marked out the 1235 route this last week. So we'll just go through this week and some different PD rays around it, just so I don't have to keep switching time frames too much and lose my spot. Once you go back on Trading View, it gets a little difficult. But we'll start with the one from yesterday we caught. So again, this is just going to focus on the 1235 model and my interpretation of it. It is a part of DTT, right? 1235 root candle and time interval. But this is my take on it, and like how you guys see me trade it, and kind of how we have the model developing. Because it's kind of an ongoing process of me sharpening this model. The more and more we trade it, the more and more we go. But so far, the framework's been really nice. So what we want to do is wait for 1235 to print. Once 1235 prints, we start a whole new time interval. Again, we'll go over these different time intervals in different classes, okay? But this one that we're talking about today starts at 1235 and it ends at 209. Okay, so 1235 to 209. This is where we want to catch this move. So essentially, once this root prints, this 1235 root, we want to be looking for a premium or discount for that price. Okay, so after that candle prints, that 1235 candle, we want to see it go into a discount or into a premium and reject some sort of PD array or sweep liquidity or both. Okay, that's kind of like the first thing we got to do. This can be a tricky trade to catch sometimes, as you guys notice. I think, what was it, the last 2 days in a row? I think I shorted at first and then immediately flipped long, right? I think that happened twice in a row. And then we ended up catching it. So it's a little tricky at times because the 1235 model is typically the one that expands the most. Good morning, sub. So between 1235 and 209, we should expect that expansion move, right? So knowing that it's going to expand a lot, we want to look for potential draw on liquidity, right? So that's kind of like before 1235 even prints, I'm starting to look for that. I'm starting to look, where's potential draw on liquidity? Do we have a lot of low resistance liquidity built up? Do we have, important highs or lows that we could go after? Is price bullish or bearish on the 15-minute time frame? Okay, that's kind of like where I'm starting the whole thesis. Okay, so yesterday we had this 1235 print, and this is also where you could use other routes. Okay, now prior to 1235 printing, I was telling you guys this one's going to be a little tricky. We have a lot of liquidity below here, and we still have liquidity higher up, right? But if you look on the 15-minute, what's price doing? Price is bullish, right? We're still holding 15-minute PD arrays. Sorry, I turned my phone off. All right. So before 1235 prints, I'm looking at the 15-minute chart. This is the first thing I always do before lunch, or like right when we're getting into lunch. And I'm seeing if we're bearish or bullish on the 15-minute time frame. Okay, so if you see this right now, like we're in this 15-minute BISI, right? So everything's still bullish at this point. We're delivering from a 15-minute BISI down here, right? There's no bearish market structure here. So for me, I'm leaning bullish. I'm still open to a bearish scenario, right? Because it can start a bearish scenario as well. But I'm leaning bullish at least, right? So if price prints 1235, we want to mark any other PD arrays around. We had a 5-minute BPR here. Okay, so the 5 and 15-minute, that's typically where I like to mark my PD arrays for this model. So once it prints, we notice that we come down, we sweep liquidity here, right? And then we also tag this 5-minute BPR. So that's when I decided it's a good time to look for a long, right? So again, once 1235 prints, we want to look for a sweep of liquidity and or tagging a PD array. Now, if you get a time candle in there, like 9:35 or 9:53, being dyslexic. See how this was printed here? That's additional confluence as well. And I hope you guys are starting to see how we kind of use these routes to frame trades. You can essentially look at 9:53 as like a pivot point, the way we use midnight open, right, throughout the day. So 12:35 prints, we go into the discount of 12:35, we sweep liquidity, and we tap a PD array, and we hold 9:53. So these are all clues for me that price is likely going to be expanding higher into 209, right? So once we see all this, you can look for our entry model. I prefer to use inverse fair value gap as my entry model, but you can use anything that fits your model, fits your style. Once we tag this 5-minute BPR, we get an immediate inverse, right? I believe I went long on this candle. There was a TMSO here. And we're still in the discount at 12:35, so we're getting a really good price, right? So again, it's about building clues in this area right here. Right after 12:35 prints, we got to start building clues immediately of, are we sweeping liquidity? Are we tagging a PD array? Where their time candles are being tagged into during this time, and then look and see what lower time frame candles are doing after that happens, right? Once we tag that 5-minute BPR, we get an immediate inverse. So you can frame that as your entry model, and that's what we did yesterday. Now, I talked about this on stream yesterday, but when you're using an inverse fair value gap, there's 2 ways to enter. I guess you could say there's 3 ways to enter. You could enter as soon as this inverse is created, right? So as soon as this candle closes, you can enter. If the inverse you're using is in discount of a leg, okay, or premium if you're shorting. So I'll show you both examples. They're right in front of us anyway. So this is just my method, by the way. It's not like a hard rule, written rule. So this is what I do. This is how I trade inverses myself. So if we have an inverse that's in the discount of the leg, I don't have to wait for this retest. I'll just slap it. Now, you can wait for the retest, but a lot of times if it's an inverse in discount or premium, like way discount or way premium, you may not get that retest. It may just be turn it into a BPR. You'll see that on the charts a lot. Now, if the inverse is not in discount, like let's say you missed this entry, right? There was another one. This is also one that I'd consider discount. You could just enter as soon as it closed. But let's say you missed this one. Let's say you missed this one as well, and you still want to use an inverse. Well, now that we're climbing up out of discount a little bit, we do get another inverse here. Because at this point, you're seeing that, okay, we hit this 5-minute BPR. We swept liquidity. We're bouncing off 953. These are all clues we look for, okay? But let's say you're being a little bit cautious, right? And let's say you just missed this, you missed this. Now you get this. This inverse here, since we're coming out of discount now of this leg, I would want to wait for a retest, okay? Because otherwise, if this candle closes way up here, and you slap it, now you have, a lot of drawdown for this trade to actually be invalidated. Sometimes I'm hesitant to enter like that if the candle, that inverse takes out a swing. Are you talking about this right here? Jaws? This particular candle, how it took out the swing here? So think of premium and discount is like one of the best ways to look for the lowest risk entry. If you're bullish, if you can get in the discount of the leg, that's ideal, right? So I can enter as soon as this closes above, or I could wait for a potential retest if I want to try to get a little bit better fill. Sometimes you won't get it. Like in this case, I didn't get it. I did wait for this to hit TMSO. And that's another entry model you can use. Like I said, it's any entry model that fits you, that works for you. Yeah, well, you could wait, Jaws. You could wait. I mean, that's a good question. So you're thinking in real time. We just swept this liquidity. How do I know we're not going to keep going down? How do I know that we're not just going to keep going, right? And it's not just going to be a liquidity sweep. Well, that's where the higher time frame comes in. And when I say higher time frame, I'm just meaning 5 or 15 minute relative to the 1. So that's where we find out, well, where's price stopping? What's it hitting right here? This is a 5-minute BPR, right? So knowing that, and we get this instant reaction, I think I remember telling you guys on the stream, okay, we're going to go up. Because as soon as we had that instant reaction off that 5-minute BPR, that's all the clue we need, right? And Tony, a BPR is just, this is my version of a BPR. Okay, BPR for me is when we have two, I'll zoom in here. See how these two fair value gaps don't have any wicks or bodies in between them? They're just two fair value gaps that are overlapping. I have no wicks here, right? So that for me is my BPR. That's how I would use a BPR. Does that make sense, Tony? Just two fair value gaps that are completely overlapping, no wicks or bodies in between. So that's what this was on the 5-minute. I'll show you. See here? So when price swept this liquidity here, it just dug right into this and we instantly reacted off of it. So like I always say, you have to be building clues in real time while price is printing, right? And that's why it's important to have these things marked on your chart. Yeah, it's usually a strong PD, right? Yep. Because it's an inverse fair value gap and a new fair value gap combined. Don't take an inverse about the discount of the range. So this is discount of this range, right? So I'd be looking for a bullish inverse. I wouldn't necessarily be looking for a bearish inverse unless we rejected a PD array. Just like in here, see how this was an inverse up here? We swept liquidity, we made an inverse. Never got a retest, it's in high premium. A lot of times you'll see that happen. Don't usually take inverses at premium. If I'm shorting, no. Yeah, when I'm looking for longs, you can. I mean, if the draw on liquidity is higher, longing and premium can still work. It's just you risk. Even if its price is going to be bullish and you long in premium, like if you long too early here, right? Let's say you longed right here. I mean, this would have actually still been okay, right? You still would have gotten some points out of it and stopped at break even. But let's just say if you're trying to catch this bigger expansion move, you want to be more in discount, right? So for the 1230, so what I'm referring to discount and premium, just after 1235 prints, the current leg. The current leg here. And 1235 is a premium and discount model all in itself. So if we're below 1235 and we're bullish, any entry below it is a nice risk reward, especially if we get this kind of price signature below 1235. And if we can catch this clue of tapping this PD array, sweeping liquidity, and then you add 953 in there too. That's 3 clues for us to look to get in as soon as possible. Yeah, cool hand, Luke. You can just use stacked roots as essentially like a stronger like support and resistance. So anyway, we went long here on this retest of TMSO. There's a TMSO here. And we ended up targeting the 1202 root up here. So does this make sense for you guys on this particular example? Yeah, Eddie, oftentimes there is. You're correct. Exactly. What Eddie is just saying, that there's oftentimes a little mini Judas, right, that happens after the root prints. Now, that doesn't always happen, but you have to also understand the reason for that Judas is that's giving us a chance to get in a discount, right? So that Judas, starting at 1235, this little mini move down here, there's a small opportunity after we sweep liquidity, tap 953, hit the 5-minute BPR. This is an inducement, right? Getting people to short. The break of this, and then it takes everybody out. So yeah, you can treat that little inducement as, okay, if it is an inducement, where's it? It needs to stop on something important for me, right? Either we need to sweep liquidity or we need to tap a PD array in a discount if we're bullish. Now let's say you missed this inverse and you missed this inverse, and now you're looking for another entry. You can look for a classic 2022 model entry too. Almost every time, if we get a BPR, almost every time, if we get a BPR and there's a nice inverse entry, there's usually going to be a follow-up 2022 entry. However, it may not always be as good of a price. So for this example, the first, you got a fair value gap here, but no retest. So we got one here, but this is obviously way high up in premium at this point, and you're only squeezing out, to 1202 root 20 points. So Ali, for like a 2022 model, you would, right? You'd want to wait for a market structure shift, right? However, with this particular model, with the 1235 root, you can get in way before that. That's kind of the beauty of this model. And the key is using that root candle. So using that 1235 print, what price does after it prints it, and where it tags. It's all about building the clues. You have to build the clues. It takes a lot of practice, but we've been catching them almost every day. There's been, I think, a couple days we missed it. And of course, not going to always be right? But more times than not, we've been catching this model with this framework, and we'll keep sharpening it and building it. But again, it's all about the clues that it happens after 1235, where it goes to. Does it sweep liquidity and tag a PD array? And if so, and we see that happen in the discount, we can look for an entry model.
I'm not quite sure how to help you with
that inverse is the first clue. So, any questions on this one from yesterday? How come you decided to enter TMSO rather than retest it? Yeah, 925. That's a good question, man. So that's exactly what I'm saying. If it's in discount like this steep of a discount, that's when you could take an inverse as soon as it prints. If you're getting away from discount and you're bullish, I prefer personally to wait for the inverse to get retested. Because a lot of times an inverse might just get inverse and it just goes, right? Because order flow is changing rapidly. Yeah, if it's in discount or if it's in premium. In my opinion, that's the best way to do it. But you could still, if you prefer to only wait for the retest, you can do that. And if that's like part of how you want to make the model, that's fine too. It's just sometimes you might miss it. But again, even if you miss the first entry, there's usually 2 or 3 more entries to get in. Yeah, 1202 will typically get targeted on this move. Or sometimes it will start the move before 1235 even prints. If 1202 is lower and we had this signature at 1202, 1235 would just repeat what 1202 did and have a continuation. So otherwise, we'd want to see 1235 target 1202, which is what we had here. And that's where I usually always either collapse the trade or partial out. And then you want this trade to be complete by 209. You guys hear me talk about that a lot, right? Yeah, Jaws. Similar, but they all kind of have a little bit of a different structure to them, a little bit different rules. But yeah, you essentially always want to use the root candle as a discount and premium. Notice how what happens when we get to 209 here. Right, so we expand away, we take liquidity, we do that nasty death candle, and then the whole bullish move ends right here, right at 209. So if you're in this 1235 trade and you have runners, but come 209, you might want to either collapse it or trail the stop really tight, because it can continue, but if we expand, 209 could offer reversal or time distortion. Yeah, so I see your stops. That's another thing that you could do. If let's say you wanted to enter with 10 micros, you could do 5 micros on the close of the inverse and another 5 on the retest. And if you don't get the retest, then you just keep your 5. And you could either try to average up or just use your 5. Yeah, that's a good way to do it too. Again, it's kind of up to you how you want to approach that. Price shift around 120. It can, especially if we've already taken liquidity. So 209's best case scenario expands all the way to 209. I'm just saying that if you have this trade and you're still in it and it hasn't stopped you out, come 209, you might want to be cautious after that. If that makes sense. So let's go to yesterday's, or not yet, day before yesterday. So we also caught this one. This was almost a replica move. Really, really interesting, actually. So what do we see here? 1235 prints. We go into discount of 1235, right? And what do? We tag a 5-minute BISI. That has been holding price. So here, what happens after we tag this 5-minute BISI? We get immediate reaction. And what happens here under 1235? We get the inverse, right? Oh yeah, Dan, sorry. Reading too many things at once. So Dan, the 1235 prints, we want to see price go into, if we're bullish, we want to see it go into discount, which is below 1235, and tag some sort of higher time frame PD ray or sweep liquidity or both. If we're bearish, we'd want to see price go above 1235, reject something, sweep something, and then come back below. So like what Eddie was saying earlier, you can kind of picture it like a mini Judas swing, like a mini fake move, right? So this one, we printed, went into the discount, tagged that 5-minute BISI. As soon as we inverse this, you can go long. So I think that's when we flipped long. I think we flipped long right at this candle as soon as it inversed. So this is another example where you could have waited for a retest, right? Because this isn't really in the discount of this leg, right? And then we had 953 below. Yeah. Or was 953 on this day? Yeah, see 953 expanded away from it. Was holding above ever since. A lot of times, guys, if you just pull up the 5 and the 15, we just want to see, are we still holding 5-minute PD rays and 15-minute PD rays? If price is continuing to hold those, almost like it's a wall, right? Like it's just every time we get into it, we just continue to expand away from it. That's a really big clue coming into 1235 as well. So this particular one, if we didn't get in there, there wasn't really another entry. Sometimes this model is, it's big. It can go. So that was kind of like your one and only entry on this one. You didn't really get much elsewhere, unless you took this, high premium fair value gap, which in real time would have been obviously not easy to do, right? I would also hit VWAP, Ashley. Yeah, so if you use VWAP on your chart, I would be willing to bet that a lot of times that'll line up too. A lot of times you'll get maybe VWAP gets tested in the discount or something. It lines up with like a 5-minute VISI. So again, I really can't stress enough to you guys the 5 and 15-minute chart when it comes down to these time models, and paying attention where price is respecting, where it's delivering from. And same with on the inverse as well. Like if you have 5-minute inverses or 15-minute inverses and prices respecting those, right? And you see this one did expand all the way up until 209, and then 209 started time distortion. But yesterday's and Thursday's were very clean, really nice model. It's not always that clean or not always that smooth. Okay, so here's another example. This was from Wednesday. I think it was a few weeks ago. I think every 1235 model we were taking was a bearish one, and then this week it was like almost always bullish. But so this one is a little bit more of a tricky one here. Janelle, you can. That's actually a here. Let's go back to that real quick. That is an option. I would say if you're gonna enter strictly off a close above 1235, that you want to really make sure that we tapped a 5 or 15-minute PD ray, and we had a rejection off of it. If you see that and you miss this, then yeah, you could look for just a straight close above the root, and then we would want to see that root continue to hold above if we came back to it. Yeah, if you missed it. The key though is you really make sure there's an inverse or a PD ray that you got tagged into. Otherwise, this could just be doing a temporary sweep here, come up, reject a PD ray here, and then come back below. It can do that. So you want to make sure you're delivering from that PD ray. That's the major clue there. Right. So if we come into here's Wednesday. So here's kind of an example of how that could be tricky. So 1235 prints, it just kind of bobbles around, right? We come up into premium, and you might think, okay, in real time, this is obviously going to be pretty difficult, right? We sweep this high. We don't really get there's nothing to really work with in here for as far as like an inverse. But again, it's key to have the 5 and 15-minute PD rays on your chart that are nestled around 1235. Okay. So 5-minute inverse was right here. So what it did is it went up, took out everybody right here, came back down, tagged this 5-minute inverse. See, this is where I was talking about. It's kind of tricky. So come back above. We just closed above, still came back again to reprice this, and then we expanded. Right. So this one, you would say, okay, well, where could I enter on this one? This one's a tough one. Don't really have. You have an inverse here. You'd have to catch this pretty quick, but you'd probably get stopped at break even anyway, right? If you took this one here, you would have gotten stopped break even. So where's our next inverse? Around 1235, right here. All right. So again, in real time, you need to be building all these clues. We're delivering from the 5-minute and discount. We get this one, and we get this one, right? So this one would have been the entry model right here. If you would have tried this one, you would have gotten stop break even. But even if you get stop break even on that, you see what happens. We just immediately wick out of that same 5-minute inverse. So in real time, you're watching this and you're thinking, what could be happening here? Then you get this inverse here. You could use this as your entry. It's also above 1235. I personally don't use 15 or 30 second very much. Every once in a great while I'll look at it if price is really, really confusing to me. But the lowest I tend to go is the 1 minute myself. But this is a one of the more difficult ones to catch right here. But as you can see, even when it's this difficult, the model still does present itself. Right, let me expand all the way up. And this is a nice continuation trade from 209. So this one just continues. Crazy move. While starting here at this 1235 root. So then on Tuesday, we have another example here. This is a 5-minute inverse. It's going to take a lot of reps and a lot of chart time to see this kind of stuff. But again, it's all about building clues. I can't stress that enough too. Just you got to be always building clues. What happens here? Price comes down, sweeps this low, right? Again, we're going into 1235. We're building these clues as price is printing, right? I'm watching this, watching how this happens, right? So this is a nice example where 1202 kind of gives you the entry prior to 1235. Because you can treat 1202 exactly the same way as 1235. 1235 is usually just the start of the actual move. And so 1202 can either get you in early or it becomes a target for 1235. But you could just not use 1202 at all and strictly use 1235 for this model. So that's kind of what I'll keep it, so it's not too confusing. So the 5-minute inverse is here. We swept this low. So as soon as we sweep this low and we get a 5-minute inverse, 1235 prints. Doesn't really offer much entry here, right? So this is another really good example. We do have this inverse over here that we see it happens after 1235 prints. You guys see that? The candle that closes over 1235 also inverses this. Now let's say you missed that. Oh yeah, this was the day midnight was right on it. I remember that. So once we close over that, so that's a potential entry right there, right here off this inverse that's nestled here with 1235. Let's say you missed that entry. Can you find another entry right here? This is still, low enough for me to use a regular fair value gap. So this would be a potential entry right there as well. Especially once you know that we're expanding away from this 5-minute inverse and we have liquidity has been swept here. So it's about building clues prior to 1235, checking the 5 and 15-minute chart. What PD arrays are we holding? What 5-minute fair value gaps, what 15-minute fair value gaps are we holding? Are we delivering from bullish fair value gaps or delivering from bearish fair value gaps? Which ones are directing price? Yeah, so 1110 and 12 between 1110 and 1202 price is extremely tricky at times because it's a lot of times it's in time distortion during that time. Almost always, actually. You'll get time distortion. So that time is more for either scalping, putting stop at break even type thing, or just sitting on your hands. But you'll notice 1110 and 1121 usually just bounce between each other or just enter time distortion. But as you can see, it's all about the PD arrays nestled in here with 1235. That's where the clues usually pop up. So here's one. This was on Monday. It was kind of a short-lived trade using the exact model that we're talking about here. So come in 1235 prints. We come into discount of 1235. You notice the pattern here, guys, right? We go into discount. We get 2 inverses here. As soon as we go into discount, you get this one, and you get this one, and then discount of 1235. So you could use this as an entry. You could use this as an entry, or you could use this fair value gap as an entry. Seeing that price displaced above 1235 with speed, and you'd be targeting this high. So this one would have only offered, let's say if you got in at the inverse, you would have gotten about 40 points. Fair value gap, 20, 30 points, and that's all it offered. So, but the model's still there, and that's nice to still catch. Yeah, so 953 is usually you got to be quick. 953 usually has speed. So, don't want to do too much 953 talk on this video because it's kind of a different model. The other video I did goes into it a lot better, but yeah, I mean, it's all the same premises, right? I mean, you see how 953 prints? We go into the premium of 953. What do? We inverse this in premium of 953, and it's gone, right? Yeah, so 209, you don't want to use 209 like a root candle. You just want to use it as where the time model essentially completes. So 209 here. Now this is kind of interesting because you can continue to use 1235. So after we swept this liquidity and we would have used it how we trade it, we would have caught this move. Obviously, runners would have been stopped out, right? But then we close back below 1235. You get displacement. Now you can look for a short. Yeah, I mean, that's understandable, Jaws. This is a very aggressive inverse. This, obviously, in real, this is a nice hindsight trade, this one, right? Because in real time, you see this inverse gets created here. So you're going to chase it, you're going to enter right there? Probably not, right? Probably not going to do that. So sometimes it's just, I mean, even if the model presents itself and the trade does play out exactly how it should based off the model, may not offer an entry, right? I mean, it's just, you'd have to either, I mean, one would say you could predict this inverse here, right? Based off this order flow right here. You could, high probability inverse is incoming here. But again, if you don't take that, it's no big deal. Sometimes you'll get a retest. Sometimes it's a nice clean inverse with a retest into the 953 candle. You can use it, but sometimes you don't. You just miss it, and that's okay. There's always another trade right around the corner. There's liquidity that's priced into the market at these root candles to align with all exchanges. So, all these root candles have a lot of liquidity engineered into them. That's why we see them, how they're priced into so often. Yeah, I mean, it's the same, Kelly. 1235, everything, even, NFP week, FOMC week, all weeks, we still treat the model the exact same. It just could be more violent at times, right? But so let's kind of go over what we need to see for 1235, right? So you guys, maybe can write this down. Okay. So one, we need to check 5-minute and 15-minute for value gaps. So that's the first step. We're checking the 5 and 15-minute chart, and we're seeing what are we holding and where's price delivering from. Okay. Number 2, did we sweep liquidity? Are we respecting 953, 34? This won't always happen, but this is like an additional clue. Okay, if we have 953 or the 1034 route right around 1235, like on Friday, yesterday, we did right. This was 953. If you're seeing that, right, that's another potential clue, right? So do we get a reaction off a 5-minute or 15-minute PD ray that's nestled around 1235? The 953 video is in the most recent video of the mentorship. 1034 I haven't made a video on yet. That one's coming. If we do have that 5-minute or 15-minute PD array around 1235, if we see price respecting it, we want to look for a 1-minute output 1 minute. 1-minute inverse. If you missed that entry, look for a 2022 model. Yeah, so exactly. It's like that's the best. When we get 1235 to print, we go into discount or premium and we smack into that 5 or 15-minute PD array. We get a strong reaction off it. It's like go time, right? You try to get in. And again, even if you're wrong, it's okay to flip. It's okay to be wrong, okay? But you try to build these clues the best we can. And I guess the 7th thing would be, do we have targets? Yeah, it's definitely like one of the best trades of the day, simply because of the amount of points it typically can offer and the continuation. Like if you're someone that likes to average up a lot, this is the model that you'll get that opportunity if you catch it early. If you catch it early, this one can offer some really nice average up entries because you don't always get, as you guys have seen through a lot of these models, that after 1235 it just goes, right? Speed and conviction. So these are the main clues. Everything we want to be building around that 1235 time of day. Does anyone have any questions about it that I can go over more? Yeah, midnight, I guess you can add into this. If it's nestled around there too. Midnight can also just be a target. It could be a target if we haven't repriced it yet. That could be another thing. Well, Kelly, that just comes from like when I do turtle soups. That just comes from a lot of screen time and essentially expecting price to stop at a certain spot if it has a lot of speed. If price has a lot of speed, like I missed this one, I should have caught that. But this was a replica of the one we caught Thursday. We caught this one, right? Oh, Sub, you caught that one yesterday? Nice. It's literally the exact same trade as one we caught on Thursday. Yeah, Demont. Yeah, I mean, essentially with turtle soups, guys, it's just I've kind of said this on stream a little bit, but you want to have multiple points of confluence before you attempt a turtle soup. You want to see it tag a PD rate or a time level. Best both if it has a PD rate and a time level, like TMSO. If you have like a time, so this is the one I took here on Thursday. As soon as it tapped into this 1 minute BISI, because we had a lot of speed down, right? A lot of speed down coming into 1034. So I knew that if I went long here on this candle into this BISI, that there's a high probable chance I'll have at least a reaction off of 1034. But if not, I can just cut it, right? I'll just cut it right away. But the reason why I would take this is because there's headwind here for me to get a nice entry. And what I mean by headwind is, and I see this speed, there's a few reasons price would stop right here, right? We have a bullish PD ray plus 1034, and it's already ran all this liquidity. So for me, that's enough for me to want to strike that. Now, if 1034 wasn't here, and this wasn't a BISI, and it was just more low resistance liquidity like this, there's no way I would have tried to catch this, right? You need to have reasons for price to stop. You can see that all over the charts, really. The same thing for the one that Sub was talking about that he caught from yesterday. This is almost a replica. You have this 1 minute BISI here, right? Price dumped really hard into it, and also we have the 1110 root and the 1120 root nestled all right there, right? And 1235 just below. I was being a little too patient. I was going to try to soup 1235, but you got all these points of headwind right here for this to stop. Big M order block on gap. Which one? Except notes and models I had written down before that there is a time distortion around 10. If you get 12 distortion at 1235, then I would typically look for 130, Eddie. PM open. Oh, was it a 5 minute? It probably was a 5 minute order block, yeah. Big M. I'm sure it was from. Yeah, breaker in here. So it's all the points of confluence you can add in there, the better, of course. I strictly use soups off time levels and PD rays, like fair value gaps. Order blocks are good too. If you use order blocks or breakers or mitigation blocks or whatever you might use, that could work as well. I personally don't use those. The only time I really use order blocks are if I'm trying to, like, if I missed my entry maybe I'll slap an order block, or I'll use it as a stop loss, a trailing stop loss. Yeah. So 1235 or not, you can always look for Q3, Q3 inverse, right? It's really nice because yeah, that is kind of nestled within that time period, that Q3 from 1245 to 108, which is also, if you look in the Turtle Soup section in the Discord, there's certain times a day that we would want to look for high probable turtle soups, and this is all off my back testing for I don't know how long. But if you look, let me find it. Okay. If you look here, lunch liquidity raid, high probable turtle soup between 1245 and 108. 1245, 108. What do we get? Turtle soup, right? Now, doesn't mean we're guaranteed to see a turtle soup during that time. It just means that if we do get one during that time, and we have other points of confluence, it's really high probable, really, really high probable it will deliver. But that's you don't need to even know that. You don't have to even know that information. It's just one more piece, if you want to dive deeper into it. But yeah, Q3 inverse model is solid regardless of the time of day. But you can use it with the 1235 model just for even extra confluence. That's kind of also why we took this yesterday, right? Does anybody else have any questions on this? I mostly just wanted to go over the 1235 model since we've been trading it every day together, and this week we caught a lot of them. I just want to keep going over it with you guys so you are understanding it as well. Again, it's not always easy. It's not an easy trade. I don't think there's any trade on the chart that's always I would consider easy, but this is something you can use as framework for high probability.